Hello students. Okay. Today's lecture would be a very important lecture because we are starting with evaluation part of your evaluation chapter. Students, evaluation chapter, Tulsi, Kavita, Milind, happens to be the most important topic. As I told you earlier also, and I'm repeating this point again, it always comes in your examination and you will find on the basis of the today's class what are the various important particular questions that we have drafted and how to write the solution. The most important is about how to write the solution. The conceptual part I have already discussed in the first class. Those who are yet to join this particular entire batch, please do it through this particular the Telegram link which I have given to you in the description box. The first number you can just connect to the WhatsApp and I will add you in that particular link. Students, the questions which I'm going to mark for you today, at least that would be one question that you will consider that as the last day revision. As the last day revision, students. So last day revision, you will have to take that particular question into account. Very important question. You will come to know what I'm talking about it. A very quick recap, students. I told you that the valuation scheme has got two particular category. The valuation scheme, students, has got two particular category. Category 1 valuation, students, if you can recall, if it is in 15.1, 15.2 and 15.3. So the transaction value becomes the basis. Students, the transaction value becomes the basis of it. And on that transaction value, you add 15.2 and 15.3. On that transaction value, you add 15.2 and 15.3. So add 15.2 minus 15.3. The second valuation is under 15.4, which will take you to the various valuation rules. So we have done the first category. Now we are supposed to do the question and answer of this particular first category. And as you will see, students, in today's class, how you will have to read the question, which is the ultimate thing. Ultimate thing is to how to read the question and what to write in the answer. 15.1. So 15.1, students, in the first line of your question, when they talk about the price which is charged, for that you have to give your note. In the question that they will give you, that the price is charged is this, you will have to give the note. What is the note? 15.1 note. And what is the 15.1 note? The price which is charged is what? The transaction value, which is adopted under 15.1, provided two conditions are satisfied. I've given you three, but at least you will write two. Which are those two conditions? The supplier and the receiver are not related person. Price is a sole consideration, and I have given you the third condition also. Students, I have given you the third condition also, and the third condition was that the recipient should provide monetary consideration. It should be only monetary consideration. Why I have given you a third condition? Because in the valuation rules, you will come to know under Rule 27, where you will come to know what? That if the consideration is partly monetary and partly non-monetary, or 100% non-monetary, then for that you will have to refer valuation rule. Either part non-monetary or 100% non-monetary. If that is a consideration, then valuation rules is what has to be referred. Vinay, good morning. Valuation rules has to be referred. Okay, so therefore I have given you three conditions, but at least in your notes you need to write two questions. Now, what is included and what is excluded, students? A very quick recap. First, inclusion is given to you in 15.2. And in 15.2, students, they have told you duties, taxes, which has been levied under any law. So therefore, you will find excise duty, you may find property tax, etc., etc. So all the duties and taxes, Vinay, all the duties and taxes which has been levied, that would be included except for the GST and the other one, which is the the compensation cess. That will not be included. That is the point that we have considered. Very heartiest congratulations, Mene, for becoming chartered accountant. Hope you are doing good. And which location? Aveen, good morning. Where are you from? Aveen, good morning. The second particular part, students, is 15B, 15.2B. Now, so far as 15.2B is concerned, what does 15.2B says? Third party payment. What is third party payment? Here I told you, students, very important point was this, students. Check out if the supplier was liable to pay for something, but the same has been paid subsequently by the recipient, on the basis of which the price has been reduced. Check out if the supplier was liable to pay for something, but the recipient has paid and the price has been reduced. If this is what is satisfied, if this combination, students, is satisfied, then we will say what, students? Then we will say that yes, because of this third party payment, students, in this particular context, since the supplier was liable to pay but the recipient has incurred those expenditure, hence this will be added to the transaction value. Point number 3, the C part, students, is about, I told you about it, that it is about what? The incidental expenditure which is charged by whom? By the supplier at the time of supply. He has to charge it. So if he doesn't charge on the following payments, some of which are given already in the law, or any other expenditure, that would be added under 15.2C if what? If the supplier has charged. The list already is given to you and it is known to you which are the list that is given to you in 15.2C. 15.2D is about the subsidy. Subsidy, two things are there. Government subsidy, ignore it. Other than government subsidy, then the same would be added to your transaction value of 15.1. But only condition for the addition is that it should be linked to the price. So it is price based, not a general subsidy. Only then the addition would be done to the transaction value under this section. The last addition is 15.2E, for which I told you that interest, late fee or penalty, if that is charged for the delay part, students. What did I told you, students? Be careful. I told you about the delay part. So interest, late fee, penalty, if it has been charged for the delay in the payment of consideration. Be careful, delay in the payment of consideration. So if the interest is charged towards a delay in the payment of consideration towards the supply of goods and service, so the supply was of goods and service and there was a delay in towards its payment, for which interest or late fee has been charged, then the same will be added to it. The same will be added to what? To the transaction value. Now here I have given you 2 points. Here I have given you 2 points. And what are the 2 points, students? In this case, 2 special point was there. One, that this interest that you will recover separately, subsequently, we will assume it is inclusive of GST. We will assume that it is inclusive of GST and we will do the reverse calculation. And the second one is about the time of supply. For which particular month it would be considered as a supply? For which particular month it would be considered as a supply? The month in which it is actually received. That is already I have discussed with all of you in this context. See, there is another interest which is charged, but that interest which is charged is a consideration for independent service. That is a consideration for an independent service. What is that independent service? Extending the deposit, or extending or giving the deposit loans or advances. So in that service, which is of extension of deposit loans or advance, in that service, if the consideration in the form of interest is charged, then that interest is 15.1. It is a transaction value 15.1, but it is exempt. So that independent service, on that the interest which is charged, that is separately exempt. That is what I have told to all of you. So this covers the entire loop of 15.2. The 15.3 students, which I also have discussed with you, was about this, and this is one thing you will keep in mind, students. 15.3, deduct or exclude the discount. Now the discount is of two types. One is the pre-supply discount, another is the post-supply discount. Pre and post. Pre means at the time of supply itself, the discount is given by whatever name called. Only thing that you should see in the question is that recorded in the invoice or not? Is that discount recorded in the invoice or not? If it is pre-supply discount, 15.3a deducted. If it is post, 15.3b comes into play. And the condition for deduction, if you want, you will write the condition in this way only. You'll write the condition in this way only. And what is the condition for deduction? First is that, students, it should be established in terms of the agreement before or at the time of supply. That is, that this discount will be given. So that should be established in the terms of the agreement, which is entered either at the time or before the time of supply. Second is, it should be specifically linked with the invoice, to those invoice of the earlier period for which the discount is been given subsequently. So it should be linked with the invoice. And the most important one is the ITC reversal. The recipient, because earlier the tax invoice was prepared on gross basis, recipient has claimed the ITC on gross basis, and subsequently through credit note the discount is given to the recipient. So that recipient, on the basis of the credit note that he has received, he should reverse the ITC. He should reverse the ITC, students. This is what it says. I hope that all of you are clear with this one. Every one of you. Is that clear to all of you? And that exactly the point. That exactly the point. With that, students, now we will see the question and answer on this particular part A on the valuation that we have discussed. Let's begin with this one, students. Now, students, if you see this rule number 35 of the valuation rules, just see this rule 35 of the valuation rules. Value should be inclusive of taxes. This rule 35 says what? Value should be inclusive of taxes. When you say inclusive of taxes, I gave you the example of that interest and all, which is received subsequently. So therefore, that interest would be inclusive of taxes, and you now know how to do the reverse working. You know how to do the reverse working. So that reverse working that you are doing is as per rule 35. That reverse working, students, that you are doing is as per rule number 35. Okay, let's begin with the question. MCQ, students, I'll take later on. First, I'm taking the question itself. So let's begin with this one, students. Question number 1. Income tax collected at source should be included in the value of income tax collected at source. TCS should be included in the value of supply in terms of 15.2a. Now, these are study material questions. First, I've used all study material, RTP, previous year papers, everything. Examine the correctness of the statement. This, students, we already know. The TCS, students, as per CBIC circular, and I told you that in the CBIC circular, it is very clearly mentioned that this TCS is an interim levy. What is TCS? I mean, it is an interim levy. So in this entire answer, this is what you need. This is what you need to put up in your answer. It is in the nature of an interim levy. It is not in the nature of a tax. It is only an interim levy. It is not in the nature of a final tax. And therefore, this is what you will have to write in the answer, and please underline the interim levy in that. That is it. That exactly is the point. So this is what it is. Now, students, this question number 2 Very important. Again, this is as per the CBIC circular. This is a very important question, student. Just read the question once, all of you. Question number 2. Why, students? So, how should the supply be made? How should the supply made by the component manufacturer? So, who is the supplier? Component manufacturer. Who is the recipient? The recipient is the original equipment manufacturer. And the original equipment manufacturer is sending the molds and dies. The original equipment manufacturer is sending the molds and dies to whom? To the supplier. How do we do the evaluation? So it goes like this, students. Herein, the supplier, as you can see, is the component manufacturer, CM, component manufacturer. The recipient, students, is OEM, original equipment manufacturer, in this particular case. Okay. So what has happened, students? This is the first point. He has sent the molds and dies. Now, based on that, students, he has manufactured the goods. And then thereafter, students, that is the goods which is the component. So then there is supply of component. Isn't it? Now, therefore, on this, the tax invoice would be there. Now, on this tax invoice, students, the game is there. So, therefore, the question, therefore, is when you talk about valuation, so therefore, there would be a transaction value 15 What is the amount which is charged? Price, paid or payable. So, what is charged is something that is there. Question to all of you is this, that whether the molds and dies will it be included? Is a question. Whether molds and dies, will this be included? Which is supplied by whom? Supplied by recipient. Who is recipient? This is a question that needs to be answered. Molds and dies, which is supplied by the recipient. Who is the recipient? The original equipment manufacturer. Will that be included or not? Students, will that be included or not? That becomes the issue under consideration. That becomes the issue under consideration. So let's have a look, students, over here. If that could be included or not. Let's have a look. In this regard, all set, students, every one of you. Perfect. So students, check out this could be included. If at all it has to be included, just inclusion means addition. Additions we do under 15.2. 15.2 has got what? 15.2a is about taxes and duties. Ignore it. B and C, I will come on B and C. Just what is D? D is subsidy. This is not a subsidy. And E is interest. That is not there. So it now boils down to B and C. Now 15.2b, check out whether it could be considered in 15.2b or it could be considered in 15.2c. First, let's talk about 15.2b. Whether it could be considered in 15.2b. So 15.2b talks about what? When the supplier, in my example, it is a component manufacturer, whether the supplier was liable for this molds and dies in the contract. And the answer is obvious no. He was not liable for this molds and dies. In this context, Tulsi, please understand. Think of it. OEM, say for example, this is a refrigerator manufacturer. A refrigerator manufacturer. A fridge or the refrigerator manufacturer. Now, for that refrigerator, they require some parts. That part they get manufactured from whom? From the component manufacturer. The parts they get manufactured from whom? From the component manufacturer. Obviously, that component manufacturer, students, now he can make any component, but the fact that this component will have to be fitted in that refrigerator, therefore it should have that design, that shape, that configuration. Those things should match, because ultimately this part will then be used by whom? By this refrigerator manufacturer, who is the original equipment manufacturer. So therefore that part should match with that design, that configuration, that shape. So therefore, to match with that, the original equipment manufacturer, who is the receiver, he will then supply what? Its molds and dies. Which therefore means what? I was not liable for such molds and dies. I means the component manufacturer was not liable for this molds and dies. And therefore, because he was not liable for such molds and dies, accordingly what? Accordingly, in that particular case, what do we say, students? In that particular case, if additions under 15.2b will not be possible. So therefore, no addition. Since what? Since the component manufacturer, which is a supplier, was not liable for such molds and dies, as it was to be provided by the recipient. It was to be provided by recipient to 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 manufacture the component as per the design or specification required by whom? Required by the recipient. So was not liable for such molds and dies, as it was what? It was to be provided by the recipient to manufacture the component as per the design or specification required by her. So if it is to be design and specification that you require, then you will provide me the molds and dies. But see, students, the answer would have changed. Be careful. Students, the answer would have changed if this would have been a general molds and dies. In general means anything general, items, which is have a general shape for all the goods that has to be manufactured. So if it is only a general part, which anyways is a generic item, like for example, students, I'll tell you, you see this one, battery, which you put on our remote, the remote batteries. Now remote batteries, all the remote battery have got various this size. Those size are standard size. Now if that battery, which has to be I'm a battery manufacturer, and the supplier is giving me the molds and dies. Now obviously, students, these are something which is a standard size. There is no such thing that for A company different size of battery is made, for B company different size. It is a standard size battery which is applicable for all the company. And if that is the case, and if you now provide me the molds and dies, then this expenditure was supposed to be incurred by me. in the context of my supply, which you have provided it to me, at that point of time, students, I will add it back. At that particular point of time, I'll add it back. But this is to be only written when the question is specific, that the component that is to be made is standard size. Because for standard item, please understand, if it is a standard size component that has to be made, manufactured, then nobody gives you molds and dies, because it is expected that you should have it on your own. But if it is, like I told you, the customized thing, the way we are discussing it in this example, if it is very specific to the recipient needs specification, then the recipient gives his own molds and dies. And I use it for manufacturing, which means that this molds and dies was not my liability, and hence it will not be added under 15.2b. Is that clear to all of you? Whether it will be added to 15.2c now? In 15.2c, what we have seen is that the supplier should charge for the expenditure in that supply. So the supplier should charge to the recipient for such expenditure. Do you think that he will charge? He will charge only if he has incurred the expenditure. Students, he will charge only if he has incurred the expenditure. Did he incur the expenditure? Did he incur the expenditure on molds and dies? Answer is no. So will he charge it to the OEM? Answer is no. So in that case also, students, 15.2c not applicable, since the supplier has not incurred the expenditure on molds and dies, and therefore what? There is no question of charging to the recipient towards the expenditure on molds or dies. Is that point clear to all of you, students? You have to write both 15.2b and 15.2c, and this is how you write. If you want to write like this also, students, it is perfectly fine. Obviously, you will write it properly, but even though you want to break it down like this, it is perfectly fine. In the IDT, students, as a thumb rule, keep in mind, the examiner require that relevant provision to be put up properly. So I have not incurred it. So ask the question, why you are not charging for the expenditure? Ask the question and shout it loudly in your home. Why you are not charging for the expenditure? Answer is, I am not charging for the expenditure because I have not incurred for that expenditure. Because I have not incurred for that expenditure. Therefore, I'm not charging for it. Is that point clear to all of you? Will you be in a position to write it in the examination in this way? Perfect. Now, this is, in fact, here your answer should end. Here your answer should end. But ICI has given a paragraph for another alternative. See, what is the other alternative? Otherwise, this is where your answer should end. But see over here, ICI in their answer sheet, they have given you one more. What it says. However, if the contract between OEM and the component manufacturer was for supply of component made by what? Made by using the molds or dies belonging to the component manufacturer. Belonging to it is belonging to the component manufacturer. But the same have been supplied by the OEM to the component manufacturer. So didn't I told you this? Who is now supplying? Who is now supplying in this case? So the supplier in this case happened to be this one. But as per the contract, in this case, originally as per the contract, it should be of whom? The same battery example. It should be of the component manufacturer. But instead, he, using the molds and dies, he tells the recipient that recipient, you buy the molds and dies and give it to me. Now, can I say it is a liability? The supplier was liable for such expenditure, but has been incurred by whom? By the recipient. So now can I say, if this is the case, if this is the agreement, is 15(2)(b applicable? I hope that all of you are clear with this one. Yes, indeed, Tulsi. I hope that now you are in a position to appreciate. See, they are not writing the provision, you are in a position to write the provision. Can we proceed further? So, in this case, if as per the contract required what? Contract was that the molds and dies belonging to the component manufacturer. Belonging to the component manufacturer. In this case. But supplied by whom? By the OEM. So the amortized cost of such molds and dies shall be added to the value of component. Let's proceed now further, students, in this case. Now, these type of questions, students, they don't come like this. You will find it in the practical question which is there. So they don't give you in this particular context. Now see over here, examine whether the following discount ought to be excluded to determine the value of supply. Now I must tell you that, students, if assuming this question comes, same type of question comes in the exam. Now it is 1, 2 and 3. What you should do first, students? What should you do? Immediately first write the provision. Relevant provision 15(3)(b) when the discount is deducted. So directly you write, students, over here, not 15(2)(b) in this case. So therefore, in this case, how you going to write? Relevant provision presentation would be 15(3) when the discount would be reduced from the transaction value. So for that, students, you have got two things. So you will write this provision like this only. 15(3)(a) pre-supply discount and 15(3)(b) post-supply. And please write the provision the way I have told you to write, or I have given you earlier, the way we have discussed in the class, students. The way we have discussed in the class, the same way, students, you are supposed to write it. Is that clear to all of you? So 15(3)(a) pre-supply, this is how it will be reduced. 15(3)(b) post-supply, this is how it is going to be reduced. I hope that all of you are clear with this one. Every one of you. That exactly is the point. So first write the provision and then move forward. And how you're going to move forward, students, in this case? Examine whether the following discount ought to be excluded to determine the value of supply. Point number 1. Company offering 20% discount for single purchase above rupees 10,000. For single purchase above rupees 10,000. So company is offering 20% discount for single purchase above rupees 10,000. So students, it is 15(3)(a). Can we say it is 15(3)(a)? It is single purchase, na? So it is 15(3)(a). So accordingly, this is known at the time of supply. Secondly, it is shown in the invoice. That is the condition of 15(3)(a). It should be shown in the invoice. Is it shown in the invoice? Answer is yes. And because it is shown in the invoice, therefore this 20% would be reduced. Because it is shown in the invoice, therefore this 20%, students, will it be reduced? And the answer is yes, it will be reduced. I hope that all of you are clear with this one. Now, students, over here, if you see, they use the word staggered discount. Now, what is staggered discount, students? I must tell you this. Staggered discount means, see, this is as you keep increasing the number of quantity of your purchase, the discount rate would also increase. Like for example, if I purchase 2, I'll get 5% discount. If I purchase 3, I'll get 10% discount. If I purchase say 4 and above, I'll get 20% discount. This type of discounts are known as staggered discount. Obviously, you will have to purchase in one go only. It's not that, okay, I will purchase 4, but I will purchase 4 in a year. No, it is not that. That is a year-end discounts and all, or a target discount. So this is something will be like a post supply. When it is like spread over the year, then that will become a case of a post supply, because then you have to see whether you meet that threshold or not over a period of time. So that is a kind of a year-end discounts and all, or the target discount. But this is a case of a staggered discount, which means at the time of purchase, the discount is offered based on the quantity that you purchase. So here, although they should have told you very specifically that for this quantity would be, say, at 5,000 you would have got 10%, and at 10,000 you would have got 20%, and the assessee has taken 20%. Be that as it may, the question is not specific, but be that as it may, here it definitely, when you take a single purchase, you do a single purchase, and in the single purchase with a higher quantity they give you a discount, you can safely assume what? It is a staggered discount. Use this word, students. It is a staggered discount. At a particular level of quantity, if there is a discount that has been given, you can safely assume. In your IDT paper, you will have to make assumption. In fact, after this question, when we start the next question, I'll tell you the format of the valuation topic. The format is the game at the end of the day. That I'll let you know. So given the case, the given case is the case of a staggered discount, where the rate of discount increases with the increase in purchase. So it's 15.3a will be reduced. Now see 2 and 3. Company offering additional discount of 1% on purchase of 10,000 pieces in a year. Additional discount of what? 1% on purchase of 10,000 pieces in a year. And the third one is, after selling a product, the company revalued the product at a lower value and issued credit note to the buyer for the differential amount. The company is lowering the value and issuing the credit note to the buyer for the differential amount. Now be careful, students, how you read the question. Be careful, students. If I read each 1, 2 and 3 as an independent item, if I issue 1, 2 and 3 as an independent item, then my answer will change. Why my answer will change? See how I am going to read. If I assume that it is an independent item, 1 is of different transaction, 2 is of different transaction, and 3 is of different transaction. If I read like this, then what happens? How I'm going to read 2? Company is offering additional discount of 1% on purchase of 10,000 pieces in a year. Now, this is an additional discount of 1% on purchase of 10,000 pieces in a year. Now, I don't know whether this additional discount may be given or would have been as a would have been given as a terms of supply which was in existence at or before the time of supply. I may not know. This additional discount may be given later on. Who knows about it in this case? So I may not be aware that was this additional discount which is given later on, which is 1%, was it at the time of supply established, already there? So this needs to be clarified in my answer through an assumption in this context. And if you see point number 3, if you see as if it is a completely independent item, forget that in one transaction, after selling a product, the company revalued the product at a lower value and issued credit note to the buyer for a differential amount. Now the credit note and all are all associated points with that ITC 15.3b. Then I might have to write what? That we may assume that what, students? That look, the conditions was there at the time of the supply, on the assumption that it was there on the time of supply, and therefore the person has 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 achieved the sales target, and hence the valuation is reduced and the credit notes are being issued. That is what we can say. This is one way of reading the question, as if it is all independent. But if you say that, sir, this is not independent, this is the policy of the company. This is the policy of the company. Now you read the question, the way to read the question will be different. This is the policy of the company, which is very clear. So what is the policy? The same, only one in the transaction. Company offering 20% discount for single purchase about 10,000. So that is there. Now, point number 2, if it is a policy, company offering additional discount of 1% on purchase of 10,000 piece in a year. So then we will say it was known to us at the time of purchase that I will be getting an additional discount of 1% subsequently later in the year. And if it is known to us, then I'm going to reduce it. If it is known to us, I'm going to reduce it. And if I see now point number 3 as if it is one transaction itself, if it is a case of one transaction itself, and if I see as 1 point only, then see point number 3 now. After selling a product, so once a sale has completed, then the company has revalued. So revaluation now is an independent. It was not known earlier. It was not known earlier at the time of sale. And if it is not known earlier at the time of sale, therefore, this reduction subsequently to the price, the reduction subsequently to the price for which the benefit has been passed on through credit note, I will not reduce it. I will not reduce my transaction value. I will not reduce my transaction. So it all depends upon whether you assume that if 1, 2 and 3 are independent or 1, 2 and 3 are part and parcel of the same transaction. So if I assume, students, I make an assumption for 3. What is the assumption of 3, students? This assumption IC has not written, but it is required to be written because I have told you how the things will change. If I take one independent to a transaction, second to a different transaction, third to a different transaction, my way of looking into this 1, 2 and 3 is different. But if I'm making the assumption that this 1, 2 and 3 are part of single transaction, part of same transaction, then the game is on. Then what is the game? Point number 1. One is the pre-supply discount 15.38 deduct. Point number 2, because it is known. Point number 2, because it is known at the time of the supply. Because it is known at the time of the supply, therefore, point number 2, 15.2b will be reduced. 15.3b, will it be reduced? Yes. Provided other condition is satisfied. And then point number 3, in that transaction, if after the transaction is over, supply is over, thereafter the company has done the revaluation and has reduced the value and thereafter issued the credit note, I will say that this point number 3 is something which was not known to us at the time of supply. Is that point clear to all of you? Everyone, this is how you have to go with it. So you will have to, students, in this case, many a times ICI gives you the fact that consider that each item is independent. Why I am assuming this as a part of the same transaction? We'll see. Why I am assuming that this is a part of the same transaction? Means one single transaction, 1, 2 and 3 exist. Why I am saying so? Because do you know, students, ICI in their questions, many of the questions you people would have read it, and in those questions you would have known that ICI clearly writes what? That consider this as independent cases. Each and every items to be independent cases. Don't they write it? Each thing would be considered as independent. 1, 2 and 3, everything should be assuming it is an independent one. So wherever they want you to consider it independent, the question generally of the ICI are specific to that effect. And hence, if they are not giving you that these are independent item, it would mean that they are part of the same transaction. And hence, you write this assumption and then start working. The solution would be the same. I hope that every one of you are clear with this one, students. These are the minute ways in which you need to read this kind of a scenario, students. I'm telling you, nobody has invested in the Q&As. You just have scrolled to the Q&As which was available to you. Only scrolled without appreciating the nuances. With that, students, now we proceed further. Question number 4, anyways, it is on valuation rules, so I'm not touching upon it right now. 5, 6 are all valuation rules. Even 7. Come to point number 8. This already we have done. Question number 8. Dushyant rents out a commercial building owned by him to Bharat for the month of December, for which he charges a rent of rupees 19 lakh 50,000. Can I say therefore, students, he is charging the rent? So Dushyant is the landlord, Bharat is a tenant in this case, where the Dushyant is charging a rent of 19 lakh 50,000. So the transaction value under 15.1 is 19.5 lakhs. Isn't it? That is established. Now see further. Dushyant pays the maintenance charges of rupees 1 lakh. Dushyant pays the maintenance charges of rupees 1 lakh for the December month as charged by the local society. As charged by whom? By the local society. So Dushyant is paying students a maintenance charges of rupees 1 lakh as charged by the local society. These charges have been reimbursed to him by Bharat. These charges, students, have been reimbursed to him by whom? By Bharat. These charges have been reimbursed to him by Bharat. Is that clear to all of you? In this context. Fine, students. Now you tell me, in that case, so the society maintenance came to landlord, and now Dushyant, being the landlord, is charging it to whom? To. That's the reason why he will get the reimbursement, na? Or you will get the reimbursement only when I have charged to whom? To Bharat, the tenant. Only unless I charge him, will he pay to me? Answer is no. So the question is, did Dushyant subsequently charge to Bharat on such particular maintenance charges towards that supply of rent? Answer is yes. So definitely Dushyant has charged to Bharat. Thereafter, Bharat has made the reimbursement. So therefore, whether 15.2c addition, will that be required to be done? And the answer is yes. Apart from that, students, also Dushyant had paid municipal tax of 285, which is not charged from Bharat. Means whatever is the municipal tax of that particular property, I, the landlord, is only bearing that particular amount. So I, the landlord, if only is bearing this particular amount, will that be a part of my transaction value? And the answer is no. It will not be a part of my transaction value, students. Is that clear to all of you? So over here, students, you will write, say, municipal taxes paid. Just hold on. So you have written transaction value. Thereafter, add the additions. Additions under section. This is how you should write. 15.2c. Because there are two additions now. We are considering it. One is about the maintenance charges. Now this would be 1 lakh to be added. The next one, students, is about what? The municipal tax. This municipal tax of 2.85 lakhs. Sorry, this municipal tax you will put it as nil. Why? The reason is very clear. Not charged to recipient. This is charge to recipient. That is the game. And accordingly, you will get what? Value. Taxable supply. Which is 20.5. Let me proceed for the students now. Let's take question number 9, students. Now, Vayu Limited provides you the following particulars relating to goods supplied by it to Agni Limited. So, Vayu Limited provides you the following particulars relating to the goods which is supplied by it to Agni Limited. What is that? List price, students, right here before discount. List price before discount. So, list price of the goods exclusive of taxes, duties, and discount. Which means, can I say this is the price which is before taxes, before duties, and also before discount? Yes, that is what it means. And how much is the amount of list price? 76,000. On that, there is a special packing at the request of customer to be charged to the customer. To be charged to the customer, students. Did you got this one or not? That exactly is the game. And that brings you to 15.2c. That brings you to 15.2c. Now coming to duties levied by local authority on the sale of such goods. This will take you to 15.2a. This will take you to 15.2a. Then the CGST and SGST charged separately in invoice. So give the reference of 15.2a only and then you say no. And for this one, first one, give the reference of 15.2a and then say it yes. And the next one, students, is the price linked subsidy received from an NGO in relation to the goods sold. So the price of 76,000 given above is after considering the subsidy. So this is after subsidy. So what I'm going to do, because it is received from NGO, add 15.2d. So the list price is after subsidy. List price, students, is after subsidy. So therefore, for the purpose of arriving at the value of taxable service, I am going to add what, students? This is what it is. Now this price, students, is the list price, which is the price charge. So can I say 15.1? For this, can I say 15.1? The price which is charged for the goods being sold, the price paid or payable. Then on that 15.2, add whatever has to be done separately. I'm considering it one by one, and that is the point. Now, Vayu Limited offers 3% discount on the list price of the goods, which is recorded in the invoice. Recorded in the invoice. So whether the condition of 15.3, condition of 15.3a satisfied? Yes, satisfied. So condition is satisfied. Now the next question is, condition satisfied. Now the quantification. For discounting, two things you have very careful. Always bear it this point in mind, students. For discount, students, always bear this two things clearly in mind. One is on the condition side, and for that you have to refer 15.3. And once this is step 1 is satisfied, step 1, this is your step 1, and if it is satisfied, then you go to step 2. And what is step 2? Quantification. The quantification will depend upon what? Upon the question itself. Check the question very carefully, students. Discount has its own variety. You will find what kind of variety you will find it in the subsequent questions of this particular topic. Varieties are there, students. So yes, as far as a discount is concerned, students, what I'm going to say now, when I have to quantify, 3% would be on what value? 3%, students, would be on what value? Indeed, on the list price, which is 76,000. on the list price, students, which is 76,000. Is that point clear to all of you? Everyone? That exactly is the point, students. So this particular 3% is on that 76,000 rupees. That is what is your discount particular part, and this is how we wrap it. This is how, students, we wrap it up in this case. So the list price of the goods 76,000. Add special packing, note number 1. Duty levied by local authorities on sale of goods, note number 2. In this context, TGST will not be considered. Subsidy received from an NGO, students. Subsidy received from an NGO 5,000. Subsidies received from an NGO 5,000. That is to be added. We already discussed. And this 3% would be on 36. Value of taxable supply 87,720. 87,720. Is that point clear to all of you, students? Come to this particular question, students. One of the important questions, students. Question number 10. Vinaka Electronics Limited, hereinafter referred to as BEL, is engaged in manufacturing television. So this Vinaka Electronics Limited, hereinafter referred to as BEL, is engaged in manufacturing television. It is registered in the state of Haryana. So this Binaka, students, is registered where? In the state of Haryana. It has appointed distributor across the country who sells the television manufactured by it. So they have got distributor, students, across the country. The maximum retail price printed on the package of a television is how much? 12,000. So the list price or the MRP is 12,000, which is printed on the package. We all know. The applicable rate of GST on the television is 18%. BEL dispatches the stock of television to its distributors, ordered by them on a quarterly basis. So every quarter they will take the requirement, and that is what they will dispatch it to all the dealers, to all the distributors. Let the distributor make the sale, isn't it? Now, question to all of you, therefore, is, students, one may get a feeling that, sir, we feel by reading the question that this distributor is this para 3 agent. This distributor is like para 3 agent. Is it like a para 3 agent, students? In this case, let's read the question further to just verify or see whether this distributor could it be said to be para 3 agent in this context. Let's have a look further. In order to promote its sales, the sales head of BEL has formulated a sales promotion scheme on 1st of April. So they are what? They have formulated, students, a sales promotion scheme. Who has formulated? The manufacturing company. Under the scheme, now, students, be careful now. Under the scheme, BEL offers a discount of 10% per television on 10. BEL offers a discount of 10% on television supplied to the distributor if the distributor sells 500 televisions in a quarter. So I will give you means to the distributor 10% discount. If you, the distributor, sell the television, how much in that quarter? 500. That is the criteria. So if you sell 500 or above, I will give you what? 10% discount. On what? On every television means the entire consignment I will give you. For the entire consignment, I will give you what? The whatever consignment I have given you to whom? To the distributor, I'll give you 10% discount. The discount is offered on the price at which televisions are sold to distributor. Can you see this? Which means what, students? Be careful. It means that the manufacturer has sold the goods to whom? To the distributor. So it is not that of principal and that agent that you're thinking about it in this context, where the supply is from the principal and it goes to the agent. No, here, because that is not a case of a sale kind of a thing. Although we do the valuation, it is a supply, but it is not a sale. It is a supply, but it is not a sale. Here, the manufacturer has sold it to the distributor in this context. And that is the point. And if the distributor, if they meet the target of their sale, means this distributor sell to the final customer 500 or above, then the manufacturer, for all the consignment which they have sold to the distributor, they will give 10% discount. That is a game. So now you tell me, students, this discount which the manufacturer is giving to the distributor, is it a pre-supply discount or a post-supply discount? The discount which the manufacturer is giving it to the distributor, is it a pre-supply discount or it is a post-supply discount? Indeed, it is a post-supply discount. Why? Because obviously first the sale has happened from whom? From the manufacturer to the distributor. Post-supply mean sale first has happened from the manufacturer to distributor, and then when the distributor will sell to the customer and that sale is 500 or above for that quarter, then the principal will give the discount to whom? To the distributor. So therefore this will we come to know only at the future point of time, and hence this is a post supply. But if it is a post supply, does that condition, which condition? This condition of discount, was it in existence in the terms of the agreement entered in before or at the time of supply? Answer is yes. And if that condition was in existence at the time of supply, therefore, whether this post-supply discount under 15(3)(b), can that be reduced from the price which is charged by manufacturer to the distributor? Answer is yes. So whatever is the price which is charged by the manufacturer to distributor, on that price this discount can be reduced, provided further other condition has to be satisfied. We will see that, we know that conditions also. Now be careful. Now I told you that discount you will always do two things. Which are the two things? One is the conditions that we discuss, and what is the second one? Quantification. And how you quantify the discount? The quantification of discount is on the basis of the rate and on what amount. So rate we know 10%, and what is the amount? So the discount is offered on the price at which the televisions are sold, excluding all charges and taxes. So if there are charges extra which is levied by the principal to the distributor, then don't charge discount on those extra charges which are levied by the principal to the distributor. So therefore the discount has to be only on the price of that particular goods before any charges or before any taxes. Is that clear? This is how the calculation has to be done. Always in the examination, think of it like this only. When it comes to discount, 2 points. Point number 1, condition. Point number 2, quantification. Is this clear to all of you? Did you ever thought on this way earlier? No. This is where the mistakes are happening. Because if you think like this, you will pause a bit. You will pause a bit on that relevant part of the question. Okay. So this discount has to be on this particular amount. You will take a pause before you can proceed further. Take the things further now. So discount which is given is excluding all the charges and taxes. Underline this. It appoints Shaw Electronics, an unrelated party as per the GST law, as its distributor in Haryana on 1st April and dispatches 750 televisions on 8th April as stock for quarter April to June. You see that? It appoints Shaw Electronics, an unrelated party as per the GST law, as its distributor in Haryana on 1st of April and dispatches 750 television. So that is the distributor, the sale by the manufacturer to the distributor for first quarter it is 750, April to June. Second quarter, students, it is how much? Only first quarter has been given. Okay, anyway. So 8th April the dispatch has happened. Read further. BEL has sold. BEL is the manufacturer. BEL has sold the television to distributor Sky Electronics at 8,400 per television, exclusive of the applicable taxes. Shy Electronic has requested BEL for a special packing of television delivered to it, for which BEL has charged 1200 per television. Tell me, now on this 1200, whether the discount will it be considered, or it will be considered on 8,400 the discount will be considered, or the discount will be considered on 9,600. On what value the discount will be considered? It is 8,400, students. 8,400. That exactly the point. Let's take the things further. Chai, Tulsi, Avi. Chai Electronics places a purchase order of 1,000 television with BEL for the next quarter, July and September. Students, the distributor reports now. We know 750 is the sale from April to July. For the first quarter, manufacturer has given to distributor 750. For the second quarter, July to September, manufacturer has given how much? 1,000 television. But the question here is how much distributor has sold the TV for these 2 quarters, because on that basis we will come to know whether the discount has to be given in the supply from the principal to the distributor or not, from the manufacturer to the distributor or not. That will depend upon how much television the distributor has actually sold to the customer. So distributor reports sales of 700 TV for the quarter April to June and 850 TV for the quarter July to September. 850 TV for the television for the quarter July to September. That exactly is the point. So in both the quarters, students, in both the quarters that 500 threshold is reached. Yes. So is the eligibility created? Yes. But the deduction under 15(3)(b) will be provided if you satisfy what, students? The other conditions also. And the other conditions also, you know, that the reversal of the ITC should be done by whom? By the distributor. Why ITC should be reversed? Because original tax invoice which is given by the manufacturer is on gross basis. So the ITC would have been claimed more by the recipient. Now with this discount, the manufacturer is going to issue the credit note. And if he is going to issue the credit note, the recipient, that is the distributor, will have to reverse the credit. Will have to reverse the credit. Is that clear to all of you? Every one of you? That exactly is the point. Now the discount policy offered by BEL, as explained above, is also available to Shaw Electronics as per the distributorship agreement. Okay, so why they have given you this statement? Why they have given you this statement? Just you remember 15(3)(b), first condition is this: establish in terms of the agreement. Is it established in terms of the agreement entered at the time of supply? This is established. This discount is established at the in terms of the agreement at the time of supply. That's the relevance of this statement. But to get the deduction, I need to also satisfy the second condition about the reversal of ITC. See this part. While Shah Electronic reverses the ITC availed for the second quarter, July to September, it failed to reverse the ITC for the first quarter. So for the first quarter of April to June, whether you will get the deduction of discount, answer is no. And if you don't get the deduction of discount, can you recall now, students, how the taxable value of the supply would be calculated? The taxable value for April to June would be the list price 8,400 plus what? Plus the additional charges for packing. Will there be any discount further? No, no discount will be given further. What about for July and September? July and September would be the list price. Thereafter, the packing charges. Now, for July to September, whether there will be the discount also that will be available? Answer is yes. Answer is yes. I hope that all of you are clear with this one. Every one of you. That's exactly the point. Examine the scenarios with reference to section number 50 and compute the taxable value of television supplied by BEL to Shah Electronics during the quarter of April to June and July to September, assuming the rate of tax is how much? 18%. Assuming the rate of tax is 18%. The first and foremost, students, I told you when it comes to write, students, how you're going to write. Just because this question is heavily on the discount part, so in your notes, discount becomes very critical factor. You just cannot get away with it. I told you, students, you will find it difficult if you have to write in the paragraph form. So when you write about the note, students, straight away you will make the table statement. Students, don't your presentation now. Students, the presentation now. Be careful when you have to now do the presentation. Your presentation has to be of three form. First is the assumptions. Assumption, students. If you have to make any, first always you need to put up the assumption clearly. What is the assumption on the basis of which you are executing the solution? The second is the main answer. The statement. Now here there would be two statements for the April to June and thereafter July to September. This is the case. And the third are the notes. Now in your notes, students, when you have to put across the discount particular part, in that discount, students, you have to be very, very careful. And what is that, students? You will have to put up the two things very carefully, which is 15.3a. 15.3a you may skip it, students, ultimately, because 15.3 has got no relevance. At least 15.3b you will write it properly on the notes part. And once you write the condition properly, and then for April, then you write for April to, so 15.3b, you will make those two chart. Make the chart the way I have given it to you. And then write for April to June. Whether you will get it? No. Why you will not get it? Condition ITS reversal not satisfied. July to September, will you get it? Yes, you'll get it. Is that point clear to all of you? This is for the discount part. The second one, students, was about the additional charges. Additional charges, any case, the notes. Now, by the way, notes has to be, one is for discount. What is the other notes that you're going to give? Other notes would be 15.1. Transaction value. Don't forget a transaction value. What is the transaction value? 8,400 in the question. Price paid or payable. Then the third note would be about that 15.2. The packing charges. That is how it would be. Is the format clear in your mind? Every one of you are clear. This has to be there if you want to get full marks. Choice is yours. Choice is yours, student. Now, many students are asking, sir, in this particular case, in this scenario, Fine, students. If you all are through with this one, every one of you. See, students, over here, be careful. The one mistake that you people can do would be, see the number of unit sold. This number of unit is sold by whom to whom? 750. Sold by the distributor to the customer. Finally, you have to calculate a taxable value, no? So this 750 is what? This is from the manufacturer to the distributor. Because what you will make a blunder in the examination that you will make what is sold by the distributor to the customer. No. We are supposed to calculate a taxable value of the manufacturer to the distributor. So how much was the first quarter sale from principal to the manufacturer, from the manufacturer to the distributor? 750. Although distributors sold something less. Same way, in the second quarter, how much was the dispatch? 1000. Although he sold it a bit less. He sold it a bit less. Is that clear to all of you? Everyone? That exactly the point, students. This is how the things has to be looked upon. With that now, students, we go to our next question, which is please come to this is the beautiful question, students. The best question, students, and this is your LDR, last day revision. This is your LDR, students. I just want you to start at least reading this question initially. Get yourself comfortable, students. LDR question. Question number 16. Avyant Limited. Quickly, students, get started. Only this page you should have read it, students. It's okay. Thereafter, we'll read it together. Just let me know once you're done. Do this one, students. Perfect. Let's then begin with this one. Avian Limited, registered in Noida, Uttar Pradesh, is a supplier of machinery used for making bottle caps. Is what? Is a supplier of a machinery used for making bottle caps. So they are supplier of a machinery. Be careful. Huh? That machinery is for bottle cap. The supply of machinery is effected as under. So they have given you the how the supply of machinery is done. The first one, students, the wholesale price of the machinery excluding all tax and other expenses at which it is supplied in the ordinary course of business to various customers is how much? 42 lakhs. So can I say, student, this is the transaction value intersection? Is this my transaction value? Yes, this is the price which is paid or payable to unrelated party in, and the price is the sole consideration. Yes, I can say that. So this is 15,1, 42 lakh. So this has to be given as your first note. 15,1 has to be your first note. Now let's proceed further. However, the actual price at which the machinery is supplied to an individual customer varies within the range of 10 plus or minus 10% depending upon the terms of the contract of supply with the particular customer. So plus minus 10% can happen from customer to customer depending upon its terms. Apart from the price of the machinery, Avian Limited charges from the customer the following incident expenditure. So what is important statement, students? Charges from the customer the following expenditure. In this case, and what is that? Associated handling and loading charges of rupees 10,000. Installation and commissioning charges of rupees 1 lakh. Installation and commissioning charges of rupees 1 lakh. So this two amount has to be, students, added further. The machinery can be dismantled and erected at another site if required. Okay. The above charges are compulsorily levied in case of each supply of machinery. So please tell me, what is the compulsory levy of the charges? Point number one is the handling and loading charges of 10,000. That is a compulsory levy. Installation and commissioning charges 1 lakh is a compulsory levy. And if dismantling is required, then the dismantling charges also would be compulsory levied. So these three are compulsory levy of the charges. So the above charges are compulsory levy. So how many are there? These are three charges. Now you tell me one thing, students, over here. This is an important one. Transportation of machinery to the customer's premises is arranged by Avient Limited through a third-party service provider. Transportation of machinery to the customer's premises is arranged by Avient Limited through a third-party service provider. That is GTA. In this case, now you please tell me in this regard, in this context, the customer enters into a separate service contract with GTA and pays the freight directly to it. So now, students, this we don't have any doubt. 15.2c, students, can we say 15.2c for this? Can we say 15.2c for this? Answer is yes. Let's see. So my transaction value, students, up till now, the position is like this, that 15.1, it is 42 lakhs. 15.2c for the three charges, two charges at least I can say, third we don't know, 1.1 lakh. Now comes your GTA, students. Now comes your GTA. Check for GTA, students, now. Whether GTA can qualify in any one of the charges, any one of the additions of 15.2. That is what we have to see. Whether GTA can that fall in any one of the additions of 15.2. Please check. Let's have a look. Transportation of machinery to customer premises is arranged by Avient. So it is arranged by Avient through a third party, which is GTA. Means I am not providing transportation to the customer location. Be very clear about that. Okay. Although I am arranging it. However, that arrangement is not contractual arrangement between me and GTA. So I am merely arranging it. The GTA will do the contract with whom? The GTA students will do a separate service contract to whom? To with that particular with the customer. And if they have done the contract, who will pay? The freight will be paid by whom? By the customer. So tell me one thing, is this GTA, was I liable? 15.2b, can 15.2b be applied over here? Whether 15.2b can it be applied, and therefore can I say will be added in that context? For 15.2b addition, what has to be? Whether the supplier was liable to pay. The supplier was liable to pay. And how do I know the supplier would be liable to pay? If the contract was between the supplier and the GTA. If the contract was between the supplier and the GTA, then the supplier was liable to pay. Here there is a separate service contract. Students, here there is a separate service contract between whom to whom? Indeed, here there was a separate service contract between the GTA and the recipient. In this case, or the customer. Customer, that they have used the word customer. So who is liable to pay? Who is liable to pay? So liable to pay is the recipient customer. And therefore, if recipient customer is liable to pay because of the service contract, hence whether 15.2b will that be applicable? And the answer is so nothing would be added. Not applicable. Why? because the supplier was not liable to pay for such charges as the contract was between whom? Supplier and GTA. Was between supplier, sorry, between customer and GTA. And and accordingly and accordingly it was paid by the customer. It was paid by the customer. Students, all of you through with this one now? Every one of you written? Fine. So just keep this particular proposition in mind, students. That is all things has to be looked upon. So why not add it? This is the reason. Now please see very carefully. Very careful, students. All of you. A cash discount of 2% on the price of the machinery is offered at the time of supply. At the time of supply, students, if 2% is offered, so it is a pre-supply discount 15(3)(a) to be reduced. If the customer agrees to make the payment within 15 days of the receipt of the machinery at his premises. So see, here is like this, that I'm giving you cash. I'm asking you, will you make the payment? Will you make me the payment within 15 days? You say yes. So on that basis, your assurance I'm giving you at that time of supply discount of 2%. And the same is recorded or shown in my invoice. The same is recorded or shown in my invoice, just on the basis of your assurance. Now, whether you will pay or not, only future will tell. So therefore, but at the time of supply, I've given you that 2% discount. Now, for the terms. In the event of failure to make the payment within the stipulated time, in the event of what? Failure to make the payment within the stipulated time, the company, point number one, recovers the discount given at the time of receiving the payment, obviously that discount will be reversed. So they will record at 2%. No separate amount of GST is recovered. So that recovery of that discount is inclusive of GST. So it is like this, that students, just take about this one. So say for example, the transaction value is say 10,000. Discount is say of 2%. So this is 200. So originally students, 9,800. Originally the GST was charged on 9,800. This is original, transaction is over. Subsequently, I came to know that within that 15 days you have not paid. So what I'm going to do, I'm going to recover that 200. Now this 200 recovery is exclusive of this is no separate GST is recovered. So can I say therefore this is inclusive of GST? Inclusive of GST, and if it is inclusive of GST, apply rule number 35. You know how to take it further then. Students, you now know how to take it further then. I hope that all of you are clear with this one. Every one of you. Fine, students? Perfect. Now, and now see, in 15 days you have not paid, I'll reverse it. And now that discount reversal is one thing, and the delay is another thing. See, whatever was the discount, I have reversed it. But then there's a delay also, which is happening now. For that delay, interest would be charged. So now, for that delay, charge simple interest at 1% per month or part of the month. On what, students? On total amount due from the customer towards the machinery supply. On what? On the total amount due from the customer towards the machinery supply. Okay, that is what it is. No interest is charged on tax due. That is one thing which we all know. Now, students, tell me one thing. This discount, students, of 2%, which has been there, and then interest that has been there, that is after 15 days only, interest would be like 15 days. We assume that you would pay, and if you pay, then accordingly nothing would be done. But if you don't pay, not only that I'm going to do the reversal of discount, plus I'm going to additionally charge you the interest. That is what the position is. Now see, students, the real game, the facts. For every machinery supplied, Avient Limited receives a price-linked subsidy of 2 lakhs from its holding company Diligent Limited. Beautiful adjustment. For every machinery supplied, Avient Limited receives a price-linked subsidy of rupees 2 lakhs from its holding company Diligent Limited. Next line. Avient Limited has supplied a machinery. Avient Limited has supplied a machinery to an unrelated party, daffodils, on 29th of August at a price of rupees 40 lakhs. Students, please understand. Avient has supplied a machine to unrelated party. Now this is a transaction or the supply. 29th August, students, he has done it. Be careful. At a price of 40 lakhs, exclusive of taxes. Invoice was issued on 29th August. So this is a supply of August. Now understand, on the supply of August, the discount will be given, cash discount, because everyone will say, 15 days I will make the payment. And if he doesn't make the payment, then the recovery, reversal, and the interest will be charged or received in the next month. So please understand, the reversal of discount and the receipt of interest will not be a taxable supply, will not be the value of taxable supply of August month. It will be a value of taxable supply of September month or subsequent month, depending upon what they have to say. That we'll see. So August month discount will be given because we don't know what will happen in future in after 15 days. If after 15 days he doesn't make the payment, that reversal and the interest collection, that will become the time of supply of subsequent month. This is how the presentation will be done. That's the beauty of this question. The corporate office of Daffodils Limited, which is at New Delhi, has entered into contract with Avient Limited for supply of machinery. That is the corporate office. However, the machinery has been installed at Daffodils Private Limited. Registered manufacturing unit is located in Gurugram, Haryana. So where the machinery was installed? In Gurugram, Haryana. Now you tell me, students, what is the place of the supplier? Place of the supplier? Avient Limited. Supplier is Avient Limited, UP. Where the machine is getting installed? In Haryana. So if we'll do the chapter of place of supply, those who are aware, they can appreciate. Those who are not aware, just wait for some time. So the place of supplier is UP. The machinery is getting installed, fixed. Where? In Haryana, Gurgaon. So therefore, can we say therefore it is an interstate supply from UP to Haryana? Interstate. If it is interstate, students, IGST is what will be charged. IGST is what will be charged. That exactly the point. So therefore, unit located in Gurgaon, Haryana. Yes, Tulsi. Now, they have Daffodils Private Limited has paid the freight. Now, Daffodils Private Limited, customer has paid the freight directly to GTA. So therefore, tell me, if we have paid directly to GTA, same 15(2)(b, can we say not applicable? This will not be added at all. This GTA expenditure, students, will not be added at all on the same reason that we have done in the previous question. Why? The supplier, Avient, they were not liable to. The supplier, Avient, they were not liable to. Liable to what, students? Liable to pay for GTA. Why? Because the contract was between whom? Between the receiver customer, Daffodils, and the GTA. So therefore, I was not liable to pay, and hence 15(2)(b) additions will not take place. Discount. Now, students, be careful. Discount at 2% on plant and machinery, excluding taxes, was given to Daffodils. Obviously, in August 29th supply, the discount will be given at 2%. Everyone will say yes. Initially, that I will make the payment within 15 days. To make the payment within 15 days. However, Daffodils paid the consideration on 30th September. Now you tell me, students, what will happen? 30th September. Assume the rates of taxes are as under. So what will happen, students? Do you know what will happen in this case? So in the month of August, 29th August, so August statement and September statement, the transaction value would be of minus 2% discount, 15(3)(a). The transaction value minus 2% discount is what we are going to report for August, students. Transaction value minus 2% discount we will be reporting for August. For September, students, your cash discount and interest, these will be reported. Now be careful, students, these are no separate GST is charged. For these two amount, no separate GST is charged, students. This is the time of supply. Na? Why September? September is a time of supply for these two charges. September is the time of supply for these two charges. Now this, you will apply rule number 35, students, and do the reverse calculation to get the value. Students. I hope that all of you are clear with this one. To get what? The value. So the time of supply of the discount reversal and the interest receipt will be in the month in which it is done. Which is the month? September, 30th September. Is that point clear to all of you? Everyone. Now let's read the things further. Assume the rates of taxes to be as under. You students, you are yet to witness a beautiful adjustment. Yet to witness a beautiful adjustment of this particular question. Yet to witness. What is that? I'll tell you. Don't worry. Assume the rate of taxes to be as under. Bottle cap, making machine. So therefore, CGST 6%, SGST 6%, IGST 12%. So I will go with the IGST 12%. Service of transportation of the goods, irrelevant in this question. We don't have to consider it. We don't have to worry about it. other services involved in the above supply. What are the services which were involved in the above supply in this case? One was inspection, another was installation. One was inspection, other which was a compulsory supply. Which was a compulsory supply in this context? We already discussed now. One was inspection, other was installation. Now you tell me, for supply of machinery minus discount, add subsidy. For that you will apply, for the supply of machine minus discount, add subsidy. Subsidy, you are getting a 2 lakh subsidy. So minus discount, add subsidy, you will apply 12% IGST. And for the inspection charges and the installation charges, are you going to apply 18% GST? What are you going to do? Or for the entire thing you are going to do 12%? Or for the entire thing you are going to do 12%? Or for the entire thing you are going to do 18%? Three options are there. Now you know where I am heading to. I am heading to composite supply. Now how do you know that you have to write something about composite supply? How do you know in the question that you are supposed to write something about the composite supply? How do you know? Through the rates. When they are giving you in the question, be careful what I am saying. How do you know that you are supposed to write something about the composite supply or mixed supply, as the case may be? That you will do once you know that there are differential rates which are being given. So here you can see the rates they are deliberately giving you about the goods. At the same time, they are also giving you rates of services. What is their expectation from you in this case? What is their expectation? The expectation is that you need to appreciate whether the supply which is of goods plus service bundled together. How do I know it's bundled? Obviously, it is given together. It is not option that okay, you take machine and don't take service, or take service and don't take machine. That option is not available to you. So it is bundled. Okay, now this bundled, is it a composite or it is mixed? Now how do you write in your answer? Remember students, I gave you again the chart, the diagram. Same way you have to explain that this is a composite supply. How do you know it's a composite supply? First of all, it is naturally bundled. Why I say it is naturally bundled? Because it is compulsorily given. There is no option. So compulsorily given in the normal course. So therefore it is naturally bundled, and the one of the supply is a principal supply. One of the supply is a principal supply, which we know which is the principal supply, supply of machine. And if that is the case, the supply would be identified. The composite supply would be identified with the principal supply. This is the answer. So the way I have given you in the chapter of composite supply and the mixed supply, in that the way we have written it, the same way you have to write the notes. Yes, I mean the equation. The equation. Put it that equation, add a separate note and write it in the notes form. So this note will come when you will do the notes in the rate. And the IGST rate you will pick up, na? IGST rate you will take 12%. IGST rate will take 12%. In that IGST rate of 12%, you will write this note. Note of what? The composite supply. Why you are taking 12%? Why don't you take 18%? That time you will take a note. The note now of composite supply. Is that clear to all of you? Don't force the note. The note should also have the logic that why you are writing the notes for composite supply, and where, for what line item you are writing the note for composite supply. For what line item? The line item is why I am taking IGST rate of 12%. Did you got this one? Because even this is there. Some students just force the notes, which is not required. Some students write their notes but for a wrong line item. Like composite supply note you are giving, but where you are giving the note for something else. This composite supply, mixed supply discussion was relevant for what? to determine what is the applicable rate. The discussion of composite supply and mixed supply was relevant for what? To decide what is the applicable rate. And that is the reason why this particular discussion was very important. Very, very important. And hence, on the rate side, write this note on composite supply and mixed supply. Did you all got this one? I'm giving you the logic of the notes also. Still that one adjustment, beautiful adjustment, students, is still pending. What is that note? What is that adjustment? I'll tell you. Calculate GST liability with respect to the supply of machinery and support the calculation with legal provision. Now, students, if you see, first, there are 2 months here. One is the month of August, another is the month of September. 2 months are there. ICI has given only one statement, August, and then below September in one statement. But I will tell you that prepare two statement. Calculation of GST liability for the month of August, and statement number 2, calculation of GST liability for the month of September. Okay. So now over here, if you see, price of the machine 40 lakhs. So this is a note number 1. Tell me, what is this note number 1? What is this note number 1? Transaction value. Price paid or payable for the goods being sold to unrelated party where the price is the sole consideration. This is what they will write it. They will write it like this. First note is transaction 115.1. Add handling charges, note number 2. Where what is this note number 2? 15.2C, we already know. Even this is note number 2. Don't write this as note number 3, students. This is also one note. Don't try to force multiple notes because logics are same. Here also you are hitting 15.2C. So one note should handle both because obviously you have to complete a paper also. So here don't overdo. Unnecessarily they are stretching it like anything. Transportation cost. What is this note number 4? 15.2B. Is it applicable? Answer is no. Why it is not applicable? I already gave you the reason. You already have noted the reason. Price linked subsidy from Diligent Limited. How much is that? 15 lakhs. Is it to be added? Yes. From non-government. Non-government means 15.2D. Note number 5, 15.2D. It is received from non-government. What is the reason that you are going to write 15.2D? It is received from non-government. Don't write only this. You will not get full marks. What do you have to write? Received from non-government plus it is linked with the price. Received from the non-government plus it is linked with the price. Is that clear to all of you? Total price of the machine now. This is the total price of machine. The cash discount, students, of 2% is on what? 2%. Cash discount is on what? On what 2%? On the price of the machine. On the price of the machine, students. Now, students, tell me this price of the machine. Be careful. See, this is where the assumptions are required. Didn't I told you, students, assumption? ICI has failed to make this assumption. Didn't I told you? What is the format of the solution? Make suitable assumption wherever needed. Make suitable assumption wherever needed. What is the format of your answer? Recall with me the format of your practical answers. Assumption, statement, notes. Assumption, statement and notes. And you know what exactly is the game? Here they are taking 2% on what? 2% on 40 lakhs. What is 40 lakhs by the way? What is 40 lakhs by the way? Just hold on. Not 40 lakhs, 42 lakhs. 2% on what? 40 lakhs. Wholesale price is 42 lakhs. The wholesale price is 42 lakhs. On what basis, students? You have taken in this context 42 lakhs. You'll see that 10% that you're talking about it, plus or minus 10% should be 44 lakhs. Na? With your particular observation, it should be 44 lakhs. From where you got this 40 lakhs is my question. The wholesale price is this. What is transaction value, students? Now for that, appreciate this is the wholesale price. Wholesale price is not the transaction value. It is the actual price at which the machinery is supplied. Always be careful. This is the transaction value. First of all, understand the meaning of transaction value. What is transaction value? Not the wholesale price. In this case, it is the actual price, transaction price, and therefore it can keep changing from transaction to transaction. Every transaction can have a different transaction value. Under 15 one. So, what is the actual price at which the machinery is supplied to an individual customer in this context? The actual price at which machinery, the price of the machinery, students, in this case is, how much is that? The wholesale price 42 lakhs minus what? Minus 2 lakhs of the subsidy. So therefore, the price which I have charged is how much in the market is 40 lakhs. Now you got it? Please recall my example now. All of you, please recall my example of that COVID vaccination. COVID vaccination example. Did you recall that example now? 300 was the price which the vaccination was supposed to be released. Tata Memorial Hospital have said, Tata Memorial Trust has said, the vaccination manufacturing company, that look, boss, 300 is still very high. I want you that you should put the price in the market of 200 rupees, for which I will give you 100 rupee subsidy. For which I will give you 100 rupee subsidy. Now you tell me, in this case, what is the price now which is quoted in the market? After the subsidy received from Tata, 200. The price which is charged is 200. Did you all got this one? So therefore, this is what is the price which is the actual price which is charged for machine. For machine is how much? 40 lakhs. 40 lakhs. And on that, the discount has been given. On that, the discount has been given. Now, my question to all of you, therefore, is in this context, be careful. So, now I hope that all of you are clear with this one. The 2% of the price of the machine, excluding taxes, price of the machine. Now, be careful when you are writing about price of the machine, whether in the price of the machine it is 40 lakhs, which is quoted in the market. Now, am I going to add, students, the charges, installation charges? Installation charges. Discount, will it be on installation charges? and the inspection charges, and the inspection charges, because the other two charges are also added. Na? Subsidy is reduced. So what is quoted in the market, students, is 40 lakhs. 2% is the price of the machine. How 40 lakhs has been arrived? 42 is the wholesale price minus this 2 lakhs. So the price which is quoted in the market is 40 lakhs. Now, whether this 40 lakhs will I add with installation charges and this one? We will say no. We'll assume that. Assume what? That the discount of 2% is only on the price of the machine which is quoted in the market after subsidy. Further, on the installation charges, inspection charges, no discount is made available. That assumption has to be there. So, assumption number one, right? What is the assumption number one, students? The discount. On the assumption number one, the discount. Please write. This is the question which is going to come in your examination and you will remember me at that time. Assumption number one, discount. Please write. I'm dictating it. The discount of 2% is given on the price of the machine which is quoted in the transaction. The price of the machine which is quoted in the transaction. Full stop. Though the price of the machine will be quoted after the subsidy, would be quoted after reducing the subsidy, comma, it is assumed that the discount is not extended on the amount of inspection charges and installation charges which is added to the value of such machine. Full stop. Therefore, the discount to be reduced under section 15(3)(a) is rupees 2% of 42 minus 2 lakhs. Show like this. Which is equal to rupees 80,000. which is equal to rupees 80,000. Fine, students. This is the note, that assumption that we are putting up, that it is only restricted to the price and not the further add-on to the price. It is restricted on the price and not on the further add-on to the price. So the conclusion is what? Restricted only. How do you revise? Restricted only to the price and not to the further add-on to the price. And not further, not to the further add-on to the price. Is that point clear to all of you? Restricted only to the price, not to the further add-on to the price after subsidy. The add-on means that two things. Okay. So students, fine. So now this we have done 15.2c. So the discount note number 6 that we are talking about, this section would be 15.3a. Upfront discount you have to give on this amount. On this amount. Taxable value of supply is 42,30,000. After doing those add and less. After doing those add and less. Tax liability IGST 12%. Now this composition scheme. Sorry, composite supply. That is what I'm going to write, 12%. Two things you have to write over here. First, why I'm taking IGST? So this note will have two notes. One is about composite supply. So first is about composite supply. And why IGST? Interstate supply. Write this one. What notes? Why I have taken IGST? So for that, I need to prove that it is an interstate supply. And that is section 10 of the IG. Section 10 of the IGST, students. Okay. Which define what is an interstate, which defines the POS, place of supply. So this interstate supply would be decided on the basis of the POS under section 10. So this is the notes making. Now come to September month, students. September month, students, as you can see, that is a separate statement. Although in this question they have given one statement, but you have to make a separate statement. For the cash discount, students, 80,000, that is the reversal that you will do. That is the reversal that you will do. Now on the interest collection, students, first of all, please be careful. Now you come to the interest amount. What is the value? The valuation is the game. This is where 90% students will go wrong. How to determine the value of this interest to be considered separately? So let's have a look to the interest part in this context, students. Charges simple interest of 1% per month or part of the month on what? Can you see that? On the total amount due from the customer towards machinery supply. How much is the total amount due from the customer? Now, first of all, 1% per month. So from 29th of August to 28th of September, students, 1% per month. Now 2 days are extra because he paid on 30th September. So 2 days are extra, means 1 more percent because or part of the month, na? So therefore total rate of interest is 2%. That 2% has to be applied on what? 2% has to be applied on the total amount due from the customer. How do you determine the total amount which is due from the customer? Check it out yourself, students, over here. Be careful. Tell me one thing. Is the total amount due from the customer is equal to the value of the taxable supply? The value for the purpose of taxable supply? Is the valuation is equal to total amount due? Is that the case? I'm repeating my question again. Just mark my words on what I'm saying now. This is such an important stage that you people are in now. Is the valuation that we are doing right now 15.1, 15.2 add and 15.3 less, is that equal to the total amount due from the customer on which I will put the interest? Because if that is what you say, that sir, yes, this is what it is, the total amount due, then whatever we have worked out, the taxable value of supply in the previous statement, 42 lakhs 30,000. On that 42 lakh 30,000, I'll put 2% of interest. 2% of interest. Isn't it? But you will find in the answer, students, 2% is on 41 lakh 10,000. How that has happened? Things are very clear, students, in this case. How that has happened? Why not on 43 lakhs? Reason is very clear. Total amount due. How much I've charged? Think logically. How much I've charged? My wholesale price was 42 lakhs. But I have to give the subsidy effect. So what I've quoted to the customer was 40 lakhs. Plus the inspection charges, 10,000. Plus that installation charges, 1 lakh. So for that machinery, this is due. You'll say, sir, discount also. Discount, no, that discount got reversed. So therefore, you're not eligible for discount. So what is due from you, because the discount got reversed, you didn't pay it now within 15 days, so it got reversed. So what is due from you is 41 lakh 10,000. This is due from the customer. This is due from the customer. No, don't write 40. Write 42 minus 2. 42 minus 2. And don't write 43 10 minus 2. Don't take this shortcut approach because you don't know the derivation from where these things are coming. Again, you have to think logically. I started with 42, but I charged to my customer 40 plus the compulsory charges. Plus the compulsory charges. Now the discount was given, but that got reversed. So the total due therefore is 41.10. Total amount due is 41.10. That is what I should receive from my customer. Although the value of taxable supply, if you see the value of taxable supply, this 2 lakhs gets added to the value of taxable supply because subsidy, which is price link, gets added. But what is due is not the value of the taxable supply. What is due is not the value of taxable. Therefore, as a matter of statement, what is due from customer, what is the conclusion, is not equal to value of taxable supply. Is that clear to all of you? And if that is the case, student, if that is the case, then final answer is also known to us now. Final answer, students, is also known to us. 2% is on 41.10 lakhs. 2% is on 41.10 lakhs. This gives you 82,200. Yes, that is interest. This is the cash discount. Total value is how much? 162,200. IGST. Do that. You have to do that. Again, be careful. Huh? This is inclusive. So here it is Rule 35. Reference to be made. Rule 35 reference has to be made over here. And finally, the total IGST payable. Total is not required. Why? Because for each month you are making a separate statement. Don't make the total IGST payable for these 2 months. I hope that all of you are clear with this one now. Every one of you? No doubts now? Make this as the LDR. Last day revision, you will have to do this. But before the last day revision, today also you have to revise it. This question. Today also you have to revise this question. I hope that all of you are clear with this one. Now that's the reason why today, therefore I gave you the 17. I want that solve this question one more time. All of you. Question number 17. With the notes, with the assumption, with that format. Assumption, statement, and the notes. Practice for this one. That's the reason why again I've repeated this question for all of you. Question number 17. It's a repetition. That is the point. Now this Binaka, students, the question that you can see, it is the same question that we did. Remember that question, April to June and then July to September, same thing. April to June and June to September. Same question is there only. July to September. So that is already done. This Kaya trade, students, in one of the examination, the same Binaka question, April to June, July to September. In that Kaya trade links, what they did, do you know? I've given you the same question of the examination. In that examination question, instead of asking you April to June and July to September, they have asked only July to September. So this question, students, if you see, it is only of the July to September. Same thing. Everything is same. So if you see over here, in this context, July to September, all the figures are same. Whatever you have discussed, no change. So why have, then you say, then why you have kept it? Just to tell you that, look, they are capable of asking you the question in this way also. Just to tell you that they are capable of asking you the question in this way also. Is that clear to all of you? So this is your July to September, which has been there. So therefore, all these questions are done. So you will practice that Avanti today and one homework question today. Now comes one homework question. What is that homework question? Question number, directly to question number 22. 20. We have discussed everything now. As far as 15.1, 15.2, 15.3 is concerned. This question therefore give you the real chance, or may I say the last chance, to practice this valuation in terms of the format of the solution, in terms of the what you are going to write in your notes. This is your last chance. You solve this and do WhatsApp me your solution. I just need to see what type of notes that you have put up in this question number 22. I'll verify it once. Just ensure to put this question 22, the last question that you solve before the examination, before you become chartered accountant. This is the last question that you're solving. So this question is a question that you're going to solve for your life at the end of it. Give your best shot, students. Format already is known to you. Citation is known to you. Reasons, what to write, how to write. Even the chart format of reason, I have made it acceptable for you. Like for the discount chart format, I told you acceptable. Composite supply and all, I made it acceptable. So I need this presentation and just put it to the WhatsApp to me personally, and I'll just see it once. This option in this free batches and all, you are not going to get it. In the paid batches, you are not getting it. Leave aside the free batch. Choice is yours. I'll see you then tomorrow. Tomorrow night, I think we'll be through with this particular chapter once and for all. Valuation.